Unlocking Africa's economic potential, the role of trade finance. Expanding trade and commerce across Africa is a complex challenge. There's no simple solution that will magically resolve it. However, one fact stands out as crucial. Trade finance is the lifeblood that supports sustainable growth and economic renewal throughout the continent. It plays a pivotal role in unifying African economies, moving beyond the remnants of post-colonial division, and is essential for allowing small and medium-sized enterprises, SMEs, to flourish and diversify. Strengthening trade capabilities, specifically the ability to export and import with assurance, enables African nations to tap into their immense potential and increase their resilience in an unpredictable global landscape. Consider the progress already made by leaders on the continent. By the conclusion of 2023, intra-African trade had surged to $192.2 billion, a rise from $186.3 billion in the previous year, thanks in part to enhanced trade financing avenues. And here's where it gets exciting. As the African Continental Free Trade Area, AfCFTA, continues to be implemented, having officially started in 2021, this figure is expected to grow even further. To date, 49 member states have expressed their commitment by ratifying the agreement, signaling a collective drive to dismantle trade barriers by providing businesses with the liquidity they need and risk management solutions. We can help them navigate currency fluctuations, political uncertainty, and other obstacles associated with international trade. Despite having one of the fastest-growing economies globally, with GDP growth anticipated to reach 4% by 2025, Africa accounts for less than 3% of global trade, most of which is based on merchandise. There's clearly ample opportunity to expand trade horizons. Yet, the quest for new trade avenues brings to light pressing challenges, including Africa's fragile banking infrastructure and exorbitant transaction costs. To counter these hurdles, it is vital for the continent to adopt mobile banking solutions and digital payment platforms in its trade finance sector, fostering transparency and accessibility for underserved small businesses. A noteworthy initiative exemplifying progress is the emergence of the Pan-African Payment and Settlement System. Over the course of 3 years, 17 central banks and more than 150 commercial banks have joined forces on this platform, developed in collaboration with the African Export-Import Bank, AfCFTA, the African Union, and the AfCFTA Secretariat. The absence of cutting-edge financial tools such as supply chain finance, trade credit insurance, and export factoring leaves many African businesses unable to engage fully with cross-border trade, preventing them from managing associated risks effectively. By equipping SMEs with these essential instruments, we can encourage more significant participation in both regional and global markets, ultimately generating jobs and promoting economic diversification. Emphasizing scalable solutions that are inclusive, technologically advanced, and aligned with the United Nations Sustainable Development Goals, can bridge the trade finance gap in Africa, which AfCFTA estimates to be around $100 billion. This pivotal shift could transform the continent's economy by facilitating local production of goods and services currently imported from abroad. By channeling more trade finance to those in need, African industries could potentially replace foreign imports with domestically produced alternatives, spurring further economic growth and sustainable development. Moreover, crafting robust financial ecosystems to assist SMEs in accessing both regional and global markets could also stimulate infrastructure investments in critical areas such as ports, roads, and digital communication networks. The infrastructure investment needs are staggering, estimated at between $130 billion and $170 billion annually, according to research from AfCFTA. However, fulfilling these needs is the only pathway for Africa to unlock its economic capabilities. To achieve this ambitious aim, African governments must forge synergistic partnerships with private sector entities and development finance institutions. In doing so, they can share knowledge and create supportive environments for innovative trade finance solutions. Together, They should work towards reforming the global financial framework by establishing blended finance structures that minimize risks for private investments, expand access to concessional financing, and create a unified pro-Africa perspective in global finance discourse. Trade finance is often referred to as the silent engine. Behind development, it holds immense potential to accelerate Africa's economic integration. However, for this potential to materialize, it is crucial for African leaders to acknowledge the importance of innovative and inclusive financial practices, remaining steadfast in their commitment to these reforms, even amid emerging challenges. Gwen Waba serves as the Managing Director of Trade, Finance, and Correspondent Banking at AfCFTA. See Project Syndicate. What do you think? Is Africa poised for a transformative shift in trade? Or are the obstacles too great? Leave your thoughts below. Disclaimer: the opinions expressed in this section are those of the author and do not necessarily reflect the views of Arab News.